welcome. You're watching Business Today Television. I'm Sakshi Patra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, it's 3 p.m. and you can actually see markets inching up higher. Now, 24,267 is on your screens, about 0.3% the upside on the of a jump, but we had also seen a 100-point rally right there. So we are hovering around 24,250 and thereabouts. When we talk about the Nifty Bank, it's 127 points higher, 0.2% of an uptick for this one. But the sectors that are actually contributing are the broader markets. Truly, they are outperforming the benchmark. Small cap index is up over 1% in trade today, whereas the mid caps have also garnered some more strength, about 0.6% up right now. Beyond this, the Nifty Next 50 is another 1% higher. Media stocks, metals, financial services, oil and gas and autos seem to be in fine shape right now. But the pockets that are still lower in trade and are not contributing to the gains today are the pharma sectors, Realty, PSU banks, consumer durables, and the IT is also seeing slight profit booking now taking place right here after hitting record high levels on the Nifty IT index. But the stocks that you need to focus on, the Adani Group stocks continuing to soar higher in trade. Adani Enterprises, the flagship firm, is now up 11.3% higher. Adani Ports follows soon, 6.5% uptick for this one. Be it Adani Green, Adani Power, Adani Total Gas. These are the stocks that are buzzing in sharp double-digit gains across the board. All the sectoral stocks are now buzzing. This is after the clarification came in from Adani Green and senior lawyers and advocates right there talking about certain loopholes and certain gaps in the US indictment of Gautam Adani. And all of this has led to a buoyant move across the space on the Adani Group stocks. We will be discussing a whole host on this one as well. But beyond this, you also have stocks like BEL that are rallying 3% up, Trent, NTPC, other stocks that are buzzing in trade. From the F&O pack, again, Vodafone, and yet another day of buoyant moves coming in for this one, 11.5% higher in the F&O segment. Gujarat Narmada Valley Fertilizers is also another one that's buzzing in trade. You have ACC, Exide Industries, Ambuja, all of these stocks that are buzzing sharply. Even in the PSU space, there is a 1% today. Beyond the defense counters like HAL and BEL, you also have some of the power stocks, you have railway stocks that are contributing in trade, and of course some of the OMCs that are continuing to garner momentum. Let's welcome our guest on board then. Mr. Sharad Avasthi, Head of Research at Smiths, is now joining right in. Warm welcome to you, Sharadji, and thank you so much for taking the time out. I just wanted to get a sense of how are you first analyzing the market setup. After those 5-6 weeks of continuous sell-off, we've been seeing some bounces return to the D Street. Do you think a durable bottom has been in place and now a sort of reversal happening even in the FII's position towards India? It's been 2 consecutive days where they have bought in the Indian equity markets. Should one say that probably things will only look up better from here on?
Yeah, I think more or less a temporary bottom may have been formed, or even for a larger time frame, even you can expect that a bottom has most probably been formed, because we corrected around 11 to 12% from the highs. And that was after a stellar run that we had. And the correction has been not across the board, but in some pockets where valuations were too much frothy, there's been larger correction. Rest of the pack, I think it's been a normal correction. So wherever valuations are trending higher or seem like beyond the comfort zone, the correction has been in those patches. So I don't think this is a very bad correction. This is a good correction, and I don't think this is a generic correction that is going to extend to something catastrophic. Regarding the FII reversal, I think we are expecting most of the headwinds that we are facing right now, particularly in terms of interest rates and inflation, which are intertwined globally as well as in India. That should ease over the next 3 to 6 months. In India, even your urban growth and rural growth, particularly urban growth, should see a very sharp U-turn. Because Q2 was largely very slow because of monsoons, heat waves, and elections. And even the festive season is totally bundled along with the Marat season in Q3 and partly in Q4. So I think all this should lead to a very strong Q3. Right now, the mood was very subtle and subdued because of that base effect, and people were thinking, that maybe consumption or growth is not coming back at that speed at which we wanted to see it. But I think this quarter it is starting to surprise. Some initial data ticks already suggest that most probably growth is back. I think by 15th December, you would have more confirmation. Some of the defense pack has been going up because, the election results are confirmation that maybe the central election setback that we saw in UP was a one-off, and most other places the present government is having a good foothold. So policy continuation and consistency is something that the markets would be happy about. Trump, there's an uncertainty, but I don't think much would happen till Jan. Now you also have the Israel-Lebanon issue coming down, settling into a good zone. So I think that will help a lot. Some of the pharma companies might be facing, headwinds in terms of container rates, etc. But that should normalize now. So that's a positive development. Ukraine, Russia is something that's been going on, keeps escalating, coming down. We can't really talk much about it. But I think globally, what I look at is the geopolitical headwinds. At least one of them seems to be settling down, which is a major issue for logistic issues. And beyond that, I think inflation and interest rates should also support broader equity market rallies, particularly as markets. I think you have more risk on that should result in a lot of flows to the emerging. All in all,
Okay.
I think it should be a very positive market scenario over the next 2-3 months at least.
Okay, should be a positive scenario over the next 2-3 months. That's definitely positive to hear. But then there is this one space that's hogging all the limelight this entire week is the Adani group of stocks. Just wanted to get your sense as well as to how are you analyzing the situation. The moment we get negative news, all the stocks come crashing down. Today we've got clarification coming in from the group. Several senior advocates are talking in favor of the Adani group and how there could be some gaps in US indictment that need to be addressed, and and of course why these continue to be allegations and nothing is proven as of yet. So all of those things are definitely been taken in very, very positively by across the board. All the Adani stocks today, high single digits, double digits, and even near 19% and 20% circuit on some of the stocks like Adani Power can be seen today. And even on Adani Total Gas, these are two stocks that are up 20% in trade. Do you think the markets are now discounting that this will be also now addressed very soon and the fundamentals remain intact of the Adani group? How would you look at it?
See, I would not tell that the group does not have risks pertaining to business risk. While these issues that keep cropping up from here and there, the earlier research report issue also, I think it was very naive. This time around, at least, they're talking about some data points. But the strange part is you find it difficult. You have to blame both people who gave bribe and who accepted bribe. But in our country, it behaves in a bit different format. I don't know what is happening there, and it's hard to comment on governments, etc. But I think as a company, after the correction, what are you getting? Most of these companies at 25, 30 times, maybe, FY27 earnings. I don't believe that in the recent past you've ever got companies at these valuations. They were trading at frothy valuations like Adani Total probably was trading at a premium to Paytm at some point in time. So I think these are companies that can grow leaps and bounds in the time to come. But I think some places still the valuations are a bit stretched. So I can't be very bullish about the whole scenario. But also you have to understand that these companies are growing into a different league with a lot of debt on the balance sheet. If everything falls in place, these companies could become like multifold gainers over the next, 5-7 years. But obviously there is a risk that if everything does not fall in place, that is a risk you want to take. So people who want to venture into that risk can get into this. But I think something like an ACC and Ambuja falling out of this issue was sheer madness. ACC had nothing to do with that, and I think ACC remains one of the most attractive bets within the cement space also. And within the Adani group, I would largely bet on Adani ports, though there have been issues regarding the Kenyan cancellation, etc. But beyond that, also, I think that's a solid business. It's available at what, 17 times, and right now it may be 18, 19 times FY27 earnings. I think that's a decent bet. You can look at. Green was also available at 28, 29 times forward. The growth rates are very strong. So I think these are businesses that were available at decent valuations then. Even, Adani Energy was available at a decent valuation of 20 to 23 times. So these were good bets to have at those prices. And regarding these news, once the price reaction happens, though technically most people would tell, that don't catch a falling knife and all that. But yeah, it's good. But I think ultimately, if you are a value investor, you have to look at these opportunities and take a balanced call that whether you want to jump into that or not. But I think most valuations, barring some of the frothy valuations where you have to take that risk whether they will grow multifold or not. But other than that, three, four, five companies within the group, I think they are decent bets long term. Top bet, I think ACC and Adani Port.
ACC and Adani Port remain as the top bets within the group as of now, and long-term things look brighter for the group as of now. So one really has to identify whether one is a short-term or a long-term investor in this space. Let's now go beyond the Adani Group and talk about several other pockets, sectors and stocks which are actually buzzing. I'll start off with the IPO space. NTPC Green has made a debut today. It's inched up higher after making that tepid listing. What is your own sense here, sir? Renewable energy space, and where do you fit NTPC Green in, both in terms of valuations and in comparison to all the peers that we have? We've had several even recently listed renewable energy plays. So how should one really look at NTPC Green?
Yes, actually, so most of the recent listings that we have were people, who were just putting up the projects, not really earning out of the project life cycle. But I think in this case, this is something that is going to earn out of the project life cycle also. And most of the projects, they are planning a very big change from around 4,000 megawatt. They are planning to take it up to 6 gigawatt or 60 gigawatt. So that's a huge change, and that will happen over the next 6-7 years. But the recent project additions, most of them would happen over the next 2.5-3 years, where they will most probably quadruple capacity or something like that. So I think based on that, at these valuations, if everything goes on flying and in time, I think long term, yeah, it might be a good bet to hold on to. But 1.5-2 years, I don't think you would gain much out of the. Means valuation wise, you will not gain much out of this company. Though sentiment wise, it might continue to trade positive. But 1.5-2 years, I can't see very big upside from these prices. I would be happier buying it, at 80-90 bucks. I think that's a good place to get into.
Okay.
But in case you are a long-term investor who wants to hold on to it for, say, the whole period, 5 to 6 years, that is 2030 and beyond, the type of targets they have, I
Right.
think then you could probably look at doubling your money from current levels also.
Okay, if you have an extremely long-term view till 2030 odd or so, then from the current levels as well, you could hope that the money could be doubled in case you are a long-term investor. So look at that. But best price points would be around 80 to 90, looking at the valuations as Sharad has pointed out. Okay, so that's as far as the renewable energy space is concerned. And now let's talk about the EV space. A lot of interesting things are happening. Four-wheeler majors are launching in their new electric vehicles. M&M has launched a few. The action is hotting up, competition is garnering pace, and now even Ola Electric has launched a slew of its other more affordable range of gig scooters, so, especially for the gig workers and the gig economy right there. How are you looking at the stock? I mean, like, it's shot up 20% circuit just on these launches that's come in. Have things changed drastically for Ola Electric? Because before this announcement, things were just pretty sideways for Ola Electric. There have been a lot of concerns, customer complaints. The company has been on it to, look at all of those situations as well. Stock price slipped below the IPO price as well. And you have suddenly all of these new exciting launches that the company has got about, and the stock market is already cheering with a 20% circuit at 88 odd levels. How would you look at Ola Electric now?
I believe a week or two back, I had come on your show and I told
Yes.
that at these prices, maybe it makes sense to get back into Ola. 180, 170, it's an exaggeration. But at these valuations, considering the type of work the company has done, the scale they have achieved, there will be problems along the line. They can't behave like a multinational day one. But I think it's a very hands-on management. So at times, such things can happen. I think more than the actual mishap, I think the social media mishap worked badly for them. But I think they will be on a learning curve. Even companies like Zomato were on a learning curve in the initial phase. They are new, young people. So I think he's a smart guy. They are putting in the infrastructure in place. They have learned it the hard way. Suddenly scaling up a business is not easy. And there are various pieces that you have to put together in a business. But he's a qualified guy. I think they have shown the metal over the last 5-10 years, and I think they'll continue to do. But volatility is something that you have to adjust in these companies. That will happen. But even at these valuations, I think you can what is it trading at? I think
88.
today improvement. Yeah, that's the value. I think the EV to sales would be somewhere around 6 times. So maybe another 20-25% is still on the cards that you could look at this company. If you consider a shorter term, 1.5, 2 year kind of horizon. But beyond that, I think these are excellent bets. So I always for such dips, where to buy these companies. And they present you an excellent opportunity. If you're a long-term investor, risk taker, then I think these are companies that can, grow manifold over the next 5-10 years.
Okay, Ola Electric can also have that potential to go multifold over the next 5-10 years odd or so. But even in next 1 to 2 years perspective, a 25% of an uptick is what you can expect on this front as well. Since we are talking new age, let's also discuss Zomato and Swiggy in the same breath. Zomato, of course, has garnered more pace over the last few days yet again because of its upcoming inclusion in Sensex, and the company will become the first new age company to get included in Sensex 30 as well. That's gotten further fuel onto this one. Swiggy, on the other hand, is consistently moving up gradually, trying to catch up the valuation gap that there is between Swiggy and Zomato. Then there are reports that at least in the quick commerce business, Swiggy is ahead of the others with their shortest duration delivery of 8 minutes odd or so. How are things going to play around? Are you deploying money both towards Zomato and Swiggy? Is one over the other preferred bet? How would you really look at this space now, sir?
See, personally, I'm avoiding both because
Okay.
somehow the traditional matrices, I find it very hard to justify and buy into these companies. And so we are not recommending anything. But if I look at both companies, I think I would be comfortable buying a Swiggy after the IPO. I think valuation comfort is higher there, as you rightly pointed out. So I think I would be happier buying into a Swiggy. Zomato, while yeah, they have the advantage of being the first mover into getting into profits, etc. But I think after the IPO, the type of dark store network expansion that Swiggy is talking about, I think you could see a lot more traction there. And once the numbers start rolling in, I think Swiggy would catch up to the valuations of Zomato. So ideally, you would know it would behave like a semi-permeable membrane where Zomato valuations gradually come down and Swiggy catches up. The flip side of the story could be, which happens in comparable valuations, that maybe Zomato corrects substantially, then Swiggy would not look that good. But at current valuations, considering everything else remains constant, I think Swiggy seems to be a better bet amongst the two.
Okay, got that. Well, Sharadji, you did talk about the defense space right in the opening comments as well. I wanted to also bring in railway space because these were the two pockets that were that retail investors were, big on. They had huge chunks of their portfolios towards these two stocks, these two sectors, and now railways is also showing some bounce return to the entire space. Stocks like IRCON, IRFC, Railtel, RVNL, they're back in momentum yet again, just like how some of the shipbuilding stocks like Garden Reach or a Cochin Shipyard are also showing momentum. So, can we safely say is the worst behind for these two pockets? And for somebody who wants to hold these two pockets for the long term, one can start averaging on the upside?
Uh, Averaging is a difficult call to take. But I think, if you're a long term player, if you think beyond 36 months, 36 to 50, 60 months, I think that's the place where you'd make money on most defense and railway stocks. Maybe, 18 to 24 months is still fairly fully discounted for most of these stories. Maybe someone just, watches out of the blue and gets into a different territory altogether. But I think 18 to 24 months would be a shorter time frame for most of them. For railways, the big trigger could be some international order wins and some of the companies, most probably RVNL or RITES, probably. If they get in some international orders, I think that could be a big fillip. They have been in talk with regarding some big orders. So if something materializes on that front, that could be very big for them. But other than that, I think they had a stupendous run up. So after that, part of the run up has been given up in some cases, most of it. But I still think that 18 to 24 months they might not have much on the table. So since you are bullish on the markets over the next 3-4 months, hold on to these stories. Don't expect what you have got in the past, but expect market linked returns. I think now people are more aware that what kind of earnings these companies can deliver, and this is less story and more in terms of what they can actually deliver on the ground. So I think that will play out. So you expect market linked returns, 15-20% upside you could get across the board in most of these stocks.
Okay.
But more than that, I think is going to be difficult unless and until you extend your horizon to more than 3 years to around 5 years. I think that is where the major cream will come out for these stocks, most railways and defense related stocks.
Okay, fair enough. So that's as far as the defense and the railways pack is concerned, viewers. Small caps are picking up further pace, 1.4% higher. It's the top moving sector right now, outperforming the benchmarks. And Garden Reach is now 9% higher as the top mover there. Several other stocks, which I will just name for all of you to know where the buzz is really happening in the last 10 minutes of trade. Aster DM Healthcare is up about 8.5%, 9%. Aditya Birla Real Estate is jumping about 7%. Ircon International 7% higher. HBL Power 7% up. Titagarh Rail 5% higher. Olectra Green Tech 5% up. Aadhar Housing Finance 5% higher, BEML, Railtel, Jupiter Wagons, IEX also about 3.5% higher. You also have stocks within the capital markets related stocks, 361 WAM, that's buzzing in trade, about 4% up in trade. Let's also look at the Nifty next 50 names to see where the action is continuing there. So you do have stocks like Adani Group stocks we've already discussed, so not pointing out all of those which are already in sharp momentum. HAL, IRFC, Siemens, NHPC, JSW Energy, Zomato, these are the stocks that are actually buzzing in trade today. Tata Power also jumping in trade. From the broadest universe, you have Ola Electric, like pointed out already. We also have stocks like NTPC Green, that's now up 13.5%, the debut stock of today. Vodafone Idea we've marked. Fedbank Financial Services is up 11.5%. It was higher by almost 19% in the morning trade. Then you have Talbros Auto also moving up. Jay Bharat Maruti, Engineers India. Some of these stocks also that are gaining some further ground right there. So that's as far as how the markets are shaping up. Sharadji, now coming back to you, especially on the large cap spaces, especially IT and pharma. These are the two pockets that I wanted to discuss with you in context that, how will incumbent Trump administration be really impacting these two particular sectors. There was a lot of hope that export oriented sectors will be the ones that we should be watching out for once things start to stabilize, and come January is when we will see further escalation in the policies that will be taking shape. Already Trump has started to talk about tariff and trade wars for his neighbors, Mexico, Canada, China as well. How are you really looking at things shaping up for these two export oriented sectors which have high exposure in US?
Um, I think see for IT, it would largely be a BFSI turnaround would help them largely because most of them have a huge exposure to the US BFSI space. And I think with Trump being on the hem, I think you could be looking at lower rates. Most probably the inflation trajectory would also be very subtle in the US as well. So, that should support lower rates. And most probably now the expectation that there could be a hard landing in the US is more or less nullified. So no one's expecting a hard landing. So not having a hard landing, not having even a technical recession, I think that largely supports the outlook for most IT companies. So for them, it should be very positive. The currency side could be one thing that could remain very volatile, hard to discount that. But other than that, I think unless or until the currencies do move, more than 3, 4, 5% in a month or, two, I don't think the IT companies would be unnerved by that. So either ways. So I think for IT, it should be good only. And I think the outlook should remain to be positive. The only point is that, the valuations might be fair to square. So within the IT space, I think to find something that might, present a very big opportunity. Maybe a Birla Soft could present a good opportunity because the valuations have a lot of comfort there. But barring that, I think, there are companies that have a lot of triggers in place. But at these valuations, they might not be the best possible choice. So at best, you could look at, Birla Soft maybe amongst the names that I can think of. And within pharma, I think again the same story. Whether they get very strong and aberrant, arrogant about pricing, then obviously there could be some pressure on pharma margins as well. So it's better to bet on companies that are not entirely dependent on US, and valuations have some comfort. So I think Dr. Reddy fits the bill. They're focusing on the India business. Valuations probably are the most comfortable amongst the pharma companies, though not much growth is expected. So in case some product, does get the trigger, that could improve substantially. So I think within the pharma space, you could bet on Dr. Reddy. Within IT, I think Birla Soft. But to take a call across the board at these means for IT, it's valuations that are not very comforting at these
Yeah.
prices. And for pharma, I think it's a bit of jinxed, mixed kind of view that you have regarding how Trump and US would behave.
Okay, got that. Well, on that note, we'll thank you, Sharaji, for being with us with all your wonderful insights like you always share with our viewers. It's always a pleasure to host you and looking forward to you coming back soon on another edition of Market Today to share with us what's the outlook on the markets. Till that time, I hope and wish you well. Thank you so much for being with us. Last 2 minutes remaining on the markets right now, viewers. We'll start wrapping up the trade. 83 points higher on the Nifty, 24,275 is where we are hovering around. So it's been choppy trade, but we tried to pull up from the morning absolute sideways and lackluster kind of a move. In the second half, the action has further picked up pace, largely also thanks to the Adani Group stocks, which have garnered a lot of attention and, swiftly moved up across the board in the high single digits and double digit moves. And some of them also hitting, 20% circuits as well and 10% circuits as well, with that clarification coming in. But let's see whether this momentum also continues tomorrow or not. What other developments will be seen overnight as well for the Adani Group stocks. But good day so far. Broader markets outperformed. Small caps and mid caps definitely more than the Nifty. About 0.3% higher is where the Nifty has shot at. When we look at the Nifty Bank, that's up by just 0.2%. But it's the small caps that are outperforming. 1.3% higher than the mid caps, about almost 0.6% up in trade. Apart from the broader markets, you have the metal space stocks, media stocks, oil and gas, autos, financial services and even banks, which have managed to pull themselves up into the green towards the end of the session. Adani Enterprises, Adani Ports, Bharat Electronics, Trent and NTPC are the top 5 movers on the Nifty as we shut shop in trade today. On the lower side, you have Apollo Hospitals, Titan, Wipro, Shriram Finance, Hindalco and Sun Pharma as among those stocks that are down in trade today. Even in the F&O space, Adani Enterprises clearly outperforms with almost 12% gains. Vodafone Idea, second day in a row, 11.7% higher. Gujarat Narmada Valley Fertilizers, another 7% up, and Adani Ports also up by about 6 odd percent. On the lower side, however, in the F&O space, you did have names like Granules, Dr. Lal Path Labs, Ipca Labs. So some of those diagnostic chain stocks, they dragged in the F&O segment today. But the PSUs were in fine fettle, 1.3% higher for the Nifty PSE index. What's pulled up is, of course, BEL with 3% gains, IRFC, HAL, NHPC, NTPC, IOC, Coal India, BHEL, PFC, REC and Concord as among those stocks which are up anywhere between 1 to 4 odd percent. Gainers in the broader market space, of course, Ola Electric marks is what we have marked already, 20% circuit after those launches that have come in. Then you have also stocks like NTPC Green that shut shop on day one, almost 12.3% higher in trade and giving decent set of returns to all those IPO allottees. Well, apart from this, you have Omax Autos, Garden Reach Shipbuilders, Engineers India, Ramkey Infra, even Talbros Auto, Ruby Mills. These are the kind of stocks that actually outperformed in the broader market universe right there. Screen is frozen, 24,276 for you. Markets have shut shop on a higher note after that day's gap. Let's see how this progresses further. Of course, we will be looking at a whole host of data points, macro specific from the US markets to see how those are taken in. And once that is come to shape, we will get to know how the global markets have reacted. Therefore, the indication for back home markets as well. Stay tuned with us on Business Today. There's a lot more for you to catch on to in terms of coverage beyond the stock market hours from the world of business. And that will be up on your screens very, very shortly. So stay tuned. There's much more to track for you.
I have gone through this indictment by the US court running into some 54 pages. My assessment is, and it is clear, that there are 5 charges or 5 counts. It is very important to note that count 1 and count 5 are more important than the others, but in neither in count 1 nor in count 5 is Mr. Adani or his nephew charged. This is like a charge sheet. It charges individuals for doing specific acts. It is like a charge sheet under the Indian penal laws, that you charge somebody with a particular act, whether it is bribery, whether it is corruption, whether it is robbery, whether it's murder. So count number 1, contained in paras 124 onwards of the indictment, is against certain other persons minus the 2 Adanis. It includes some of their officers and 1 foreign person. That is the conspiracy